What's going on, everyone? Welcome to another video lesson. Today we're going to be talking about the different exchanges that exist in the United States. We're only going to be talking about the United States because these are the exchanges that I am most familiar with. So the first question is what is an exchange? And an exchange is a marketplace where securities, commodities, derivatives, and other financial instruments are traded. The core function of any exchange is to ensure fair and orderly trading and the efficient dissemination of price information for any securities trading on that exchange. Exchanges give companies, governments, and other groups a platform from which to sell securities to the investing public. So let's dive in. The first exchange we are going to talk about is the over-the-counter market. It can be referred to as OTC or pink sheets. The reason a stock would trade on the OTC market is because it did not meet certain listing requirements. Listing requirements comprise the various criteria and minimum standards established by stock exchanges such as the New York Stock Exchange to allow memberships in the exchange. The requirements typically measure the size and market share of the security to be listed and the underlying financial viability of the issuing firm. Exchanges establish these standards as a means of maintaining their own reputation and visibility. Once a security is listed, the issuing firm usually must maintain a set of related but less stringent trading requirements. Otherwise, the security faces delisting. Being delisted does not carry any legal penalty. It merely results in the expulsion from a specific exchange. Firms can cross-list a security on more than one exchange and often do. Listing requirements are not barriers to trading altogether, as firms are always free to trade securities over the counter. However, these do not provide nearly the liquidity, regulatory oversight, prestige, or visibility as being listed on one of the major stock exchanges. So for example, the New York Stock Exchange requires firms to already have 1.1 million publicly traded shares outstanding with a collective market value of at least 100 million. And the NASDAQ requires firms to already have 1.25 million publicly traded shares with a collective market value of $45 million. Both the NYSE and the NASDAQ require a minimum security listing price of $4 per share. There is generally a listing fee involved as well as yearly listing fees, which scale up depending on the number of shares being traded and can total hundreds of thousands of dollars. NASDAQ fees are considerably lower than those of the NYSE, which has historically made the NASDAQ a more popular choice for newer or smaller firms. So it's all a scam. The next exchange that we're going to be talking about is the New York Stock Exchange, the NYSE. The New York Stock Exchange is the largest equities-based exchange in the world and is based on the total market capitalization of its listed securities. It was formerly run as a private organization. The NYSE became a public entity on March 8th of 2006 following the acquisition of an electronic trading exchange archipelago. In 2007, a merger with Euronext, the largest stock exchange in Europe, led to the creation of the NYSE Euronext, which was later acquired by Intercontinental Exchange, the current partner of the New York Stock Exchange. And this archipelago group is something you should really read up on. It's very fascinating how all of these old exchanges, New York Stock Exchange, NASDAQ, Amex, CME Group, all of these places came to be electronic, and the book is called Dark Pools. The next exchange we're going to be talking about is the NASDAQ, and the NASDAQ is a global electronic marketplace for buying and selling securities to enable investors to trade securities on a computerized, speedy, and transparent system, and commenced operations on February 8th, 1971. The term NASDAQ is also used to refer to the NASDAQ Composite, which is an index of more than 3,000 stocks listed on the NASDAQ exchange, and that includes the world's foremost technology companies such as Apple, Google, Microsoft, Oracle, Amazon, and Intel. The NASDAQ computerized trading system was initially devised as an alternative to the inefficient specialist system, which had been the prevalent model for almost a century. The rapid evolution of technology that made the NASDAQ electronic trading model the standard for markets worldwide. As a leader in trading technology from the onset, it was only fitting that the world's technologies giants chose to list on the NASDAQ in the early days. As the technology sector grew in prominence in the 1980s and the 1990s, 1990s, the NASDAQ became the most widely followed proxy for the sector. The technology and dot-com boom and bust of the late 1990s is exemplified by the rise and fall of the NASDAQ composite during that period. The next exchange we're going to be talking about is BATS Global Market. And BATS is a global stock exchange that operated based in Kansas with additional offices in London, New York, Chicago, and Singapore. And BATS was founded in June of 2005, became operator of a licensed US stock exchange in 2008, and opened its pan-European stock market in October of 2008. And as of February of 2016, it operated 4 US stock exchanges, 2 US equity options exchanges, the pan-European stock market, and the global market for the trading of foreign exchange products. BATS is now owned by the CBOE Global Markets, and the name BATS was originally an acronym for Better Alternative Trading. What's interesting about BATS is that the founder, or one of the founders, Dave Cummings, who was a computer programmer, said that he was inspired to start a company after observing Archipelago Holding be acquired by the New York Stock Exchange and Instinet to be acquired by NASDAQ within a week of each other in 2005. After the launch of BATS, other brokerage firms, hedge funds, and other clients became involved with the company. Cummings publicized the BATS service by sending emails to companies highlighting the niche that could be carved out by trading on platforms other than the big two, NASDAQ and NYSE. The niche that he sought for the company was for it to be a neutral, private, broker-dealer owned, semi-profitable utility with no party owning more than 20%. He noted that the consolidation of the New York Stock Exchange and the NASDAQ eliminated competition, and they raised prices for their services. The BAT system was intended to charge less. Among the items it did to draw customers was to offer free listing to companies with shares that traded a certain amount each day. And in my opinion, BATS is one of the most influential exchanges that came around because it challenged the status quo, drove transaction prices down, and also made it simpler for companies to list. As we discussed before, a listing is very expensive on the major exchanges. And so in this particular instance, competition actually led to a positive outcome for retail traders, hedge funds, and companies that wanted to go public. And without BATS and people like Island, Archipelago, Instinet, and of course BATS in this particular case, pushing for reform, pushing for lower transaction costs, a lot of the things that everyone does today at a low cost trading platform, transactions, wouldn't exist. And promise me you guys will read at least one day in your life the book Dark Pools, which outlines how all of this came to be. And last but certainly not least is the CME Group. And this is one of the biggest exchanges that most people in the retail space have never heard of. And actually, in one article from The Economist, it literally stated this fact. It says, the biggest financial exchange you never heard of. And the reason the CME Group is not known is because their primary focus is in derivative exchange, such as agricultural products, currencies, energy, interest rates, metals, and stock indexes. Hope you guys found this video useful and intriguing. I know that it was pretty long for something so simple like going over what exchanges are, but I think that every trader should know who they're dealing with on the opposite end when they click the buy and sell button to trade. So I'll catch you guys in the next video. Peace. What's going on, everyone? Thank you for watching this video. If you like this video, please click subscribe and hit the bell notification. Remember, it's not enough just to subscribe anymore. For some fangled reason, YouTube makes you click 2 buttons. That's not my fault, okay? So you have to click subscribe, and then if you want to get notified on new videos, you have to turn on the bell notification.